Hello and welcome to another weekly financial update from RTS Financial Planning. So this is where we go through the world of finance over the last week and also discuss some of the subjects that our investment committee are looking at as part of our RTS investment strategy. So before I dive in, can I just remind you, if you do find these videos useful and you get some value out of them, if you could just click the thumbs up link on the YouTube page, that would be ideal. And also subscribe to the YouTube channel if you haven't already, as this will give you instant notifications when new videos go live. So let's dive into this week's news. So overall, the world stock markets have had a pretty good week, and this was mainly because of tech companies continuing to report very strong earnings and subscriber growth. And there was also renewed optimism around the fight against coronavirus, with potential vaccines and probably more likely updated treatments for the virus. The US in particular approved a coronavirus treatment and also said it would fast track the virus that's being worked on by the Oxford University and AstraZeneca. But thoughts and analysis are now turning to an important economic conference taking place in the US this week, where the chairman of the Federal Reserve will give his update on how he feels the global economy is doing and what his plans are going forward. Now, it's rumoured that he is going to make a change to his tactics on inflation, which could lead to higher inflation in the medium term. Traditionally, central banks like the US Federal Reserve and the UK's Bank of England have used 2% as an annual inflation target. Now, inflation has been below this for some time now, and whilst high inflation is not great because it means goods and services are more expensive, we don't want low inflation either, because that means the economy is not growing and wages and earnings won't be growing either. So it's like the US Federal Reserve will go for an average inflation target. So it will allow inflation to go higher in the short term if it means the average stays around 2%. So do keep an eye out on this and watch this space. Our investment committee have anticipated higher inflation for some time now and made the necessary adjustments to the RTS investment strategy. In other news, some of you may remember the Libor scandal that happened during the financial crisis and after in 2008. And this is where bankers basically manipulated a key interest rate that is used by markets all over the world, the Libor rate. Now, since then, these markets have been looking for an alternative to the Libor rate because this is going to end in 2021. But as you can imagine, different countries have different views on what should be used, so there's no general consensus at the moment. But it's worth keeping an eye on this because this is a key interest rate that will affect interest on everything from debt, from mortgages to student loans. So do keep an eye on it. In the UK, news broke this week that BT was under threat of a takeover. So BT share price has been falling significantly over the last few years, and it's really been struggling, and it's even had to cut its dividend recently for the first time ever. So all this means that it now appears cheaper for potential suitors, and why it may be at threat of a takeover. But BT is not very happy about this and is employing various tactics to try and fend off a takeover. But talking about dividends, if we go back to dividends, global dividends in fact have actually fallen for the most since records began recently. And it's worth remembering that there's actually two ways to make money from investing. So you can make money from receiving a share in the profits of the company you're invested in. This is the dividend. But you also make money from the increase in share price over time, which is a capital gain if you then sell your share at a higher amount than you bought it for. Now, many investors like dividends because they like to see a regular source of income coming into their bank account. But this latest news goes to show that you don't want to be buying and holding a collection of companies just for their dividends, even if they're the biggest companies in the world, because the biggest companies in the world right now are still reducing dividends and some are even stopping them altogether. So you always want to be monitoring your portfolio and making sure you know what the plan is for your portfolio. Okay, so that wraps up this week's news. I hope you found it useful. If you have any questions, do please leave a comment underneath the video. But until next time, take care.